Hey, what's up, everybody? Happy Friday. Welcome to Free Real Estate Advice Friday, episode number 63. This one's called Is This Your Opportunity to Strike? We're going to talk about that in a minute. I usually do some sort of small business talk up at the beginning of these. As I always say, I'm completely open to if you know anyone that has a local small business or even not local, online is fine too. Please let me know because I'll be happy to plug them or even have them on for an interview. But I wanted to talk about a place I went today, which is not necessarily local to where I'm sitting, but it's local to where I was doing business today, down in East Windsor. Technically, it's in Robbinsville, right next to it. But my thank you, Angelo. I didn't have my mic down. I forget sometimes. But anyway, my business I wanted to plug today was Dolce and Clementines in Robbinsville. Incredible Italian market. It's one thing I always say about Hunterdon County is I absolutely love Hunterdon County. I've lived here all my life. But one thing that we are desperately thin on is any sort of like restaurant, really. I mean, we have some great restaurants, but we don't have that many. So, if you've lived here as long as I have, you tend to get sick of them. One thing we could really use, and I'm not going to say there's none, but to this level is a great Italian market. Dolce and Clementines is a massive market. I mean, it rivals the size of some of the grocery stores here in Hunterdon County, and just incredible amounts of prepared foods and sandwiches, and there's a whole bakery section. It's really, really incredible. So if you ever happen to be down in that Robbinsville, Trenton, Windsor area, check out Dolce and Clementine's. Great. Right next to the legendary Di Lorenzo's Tomato Pies. If you know them, originally from Trenton, they have a location right there in Robbinsville, right next to the market. So if you ever happen to be down that way, check them out. And I got a bunch of stuff today for my wife has celiac disease and she is gluten-free. It's hard to find. I shouldn't say hard to find. It's gotten easier over the years, but it's not easy to find stuff for her. And they had a whole bunch of pasta prepared pasta dishes and stuff like that. So I got her some stuff and a couple desserts for the girls and et cetera, et cetera. There's tons of stuff there. So check them out. Dolce and Clementines in Robbinsville. So this is going to be fairly quick today because I got to be somewhere at 5. But I want to talk about current market as we keep talking about. And the title of this one was, Is This Your Opportunity to Strike? So I had a really interesting conversation with a new listing that I'm taking a client today. I was with them. Actually, that's why I was down in East Windsor. That's where the listing is. And we were talking a little bit about the market and, what their expectations should be as far as selling, but also buying. Obviously, on the selling side, relatively speaking, things are going to be a little bit easier because you're probably going to have options. You're probably looking at multiple offers. It's not across the board. I mean, if you have a problematic property, it still could be somewhat problematic. But I mean, in this market, certainly the biggest variable driving everything is lack of inventory. So if you have, a decent home that you need to sell, you're going to benefit from that, obviously, on the selling side. And their question was, well, what can we expect on the buying side? Well, you're going to benefit enough on the selling side where, people keep asking me, can you get me X for my house? And I would say, well, I can't guarantee you that I can get you X, but I can guarantee you that, as far as historicals go, there's never been a time I could get you more. So I can't tell you a number specifically because, this market's relatively unpredictable. But what I can tell you is whatever money you're going to get or we're going to get on this house, the greatest amount you're going to get is right now. Could that increase in 5-10 years? Of course, because real estate, historically appreciates within reason. I mean, obviously it operates in cycles and, if you're, within the cycle, you could get lower than you would have gotten, a year earlier, but over the course of history, real estate generally appreciates. So yeah, if you want to wait 10 years, then yeah, you probably will get more money than you would get today. But if you're thinking in cycles of like actually making a move, meaning 2 years, then, pretty good bet that you're going to get the most money right now. So their question to me was, well, what can we expect on the buying side? We'll sell our house. That's fine. We'll get that money in our pocket. They're going to rent for short term unless we can find them something fairly quick, which is definitely no guarantee. But the whole point is that, as is the case with, I'd say 80% of my clients, is they need to figure out what they were going to do with their condo because they need to free up that asset and liquidate it to use it to purchase the next thing. And they don't want to be home sale contingent because obviously in this competitive market, that's not ideal. So they're very deliberately doing what we would always recommend to our clients to do. If you're really looking to be the most powerful buyer you can be, you want to just knock that home sale contingency out. And there's a couple different ways that we can do that, but the I don't want to say easiest, but the best way to do that is to sell first and then buy. And then the question is always, well, what do we do in between? Because there's probably going to be a gap there. And if it's your typical first time buyer, young, they still have family in the area, and you can take a few months to go live with your family. That's obviously ideal. Hopefully either no rent or a reasonable rent contribution to your folks or your family or aunts and uncles, whatever it is, that someone who has room for you to stay in the short term while you find a house. And then you're golden. You can go shopping and you don't have to worry about the fact that you have a house that you need to sell, and etc. That's ideal. Obviously, there are short-term rentals out there. I've had people go as far as to do Airbnbs. That can get a little expensive because they're generally not priced to be long-term. But there are, short-term rentals out there. If you can find somewhere that'll give you like a 6-month, 3-month, or 6-month lease, that's great. If you want to just do a year and realize that you may eat a few months at the end of it, that's probably fine. You could sublease, of course. There's a lot of options. There are also programs that will immediately make you non-contingent. That is the alternative to doing what I just said, renting or living with family. Obviously, there's going to be an incentive that needs to be paid there because there are companies that kind of put you in that position, and the trade-off obviously is fees. Relatively speaking, they're somewhat reasonable, but you do have to expect that you're going to pay some fees. But it's going to come back down to the same conversation that I'm going to have in a second, which is, figuring out you've decided you need to make a move. So let's just take a normal example, a very typical example, which is, you're living in a 2-bedroom condo. You've got children, or you're expecting children, or you're just planning to have children, and you want to move up to like a 3 or 4 bedroom colonial, a big upgrade, probably double what you have now. So if you have a $300,000 condo now and you're looking at $600,000 colonials, then chances are that you will have to unload the asset. And when you go find that house that you're looking for, there's probably going to be some challenges. You could swing and miss a couple times. You could find yourself faced with financial situations. So we had all those options we talked about. The third option is a program that will kind of get you in that situation. The way that program works, in short, is that they essentially take your condo, they purchase it on paper. You still live there while they hold the asset. You go find your new house, you buy the new house. As soon as you purchase that new house, your house goes on the market. Again, it's not your house on paper, even though you're still living there. And then I, as the realtor, work with that program to get that house listed and sold. So that's definitely an option. But, in these situations where you have a deliberate move that you're trying to make, sell a $300,000 condo to buy a $600,000 house, you are definitely going to, it's not something that you would wait 5 years to do, because it's probably starting to get outside of the time frame of where you would like to make this upgrade. Speaking personally, my wife and I decided to do this right before we had kids, because we wanted a little time to just enjoy a nice big house, be able to entertain, make some noise, and have, room for friends to stay over, room for us to entertain, more than 2 or 3 people. So we made a very deliberate decision to dive in, get that house. We each had condos at the time. We sold my wife's condo first so that we had enough money to go buy the house. And we lived in my condo while we were going through that process. When we bought the new house, we moved into it and immediately sold my condo. So, the point I'm trying to make about this is if that's you, you have this very like typical storyline, linear storyline that everyone shares, that, you're living in this thing, you want to live in this thing. This is probably your forever house. You're currently living in your like first home. You can't really wait out the market in these scenarios, because I don't know when this market is changing. No one knows when this market is changing, but it's safe to say that it's probably going to be more than a year or two. So if you're going to wait out this market to make your move, you got to think about it this way. And this is why I said, is this your opportunity to strike? There's a lot of people waiting for that, right? So when rates were 2.5%, 3%, people were making these speculative purchases like the one I just described, because they had 2.5%, 3% mortgages and they had all this buying power. So it made a lot of sense to dive into it, right? And that's when the market went absolutely insane. Now, a lot of people have pulled back from that, because obviously, rates being at, I think I just looked before this this podcast, and they're flat since last week. I think I saw 6.25%. Actually, let me double check that. So historically, we say about 8% is the average. 6.25% is what's being offered today. That's the same as last week. So 6.25 sounds high in recent history, obviously. Recent history dating as far back as when I bought my first house, which was about 10 years ago, a little over 10 years ago. But historically, that's actually below average. Now, we do expect to see that to continue to come down. I've been saying for months, again, based on the experts telling me that I don't know these things. I'm not a professional, financial advisor or mortgage, loan originator or anything like that. I'm just going off of what I've been told. But the consensus seems to be that we're looking at moving towards 5.5 by mid-May. I will say it is trending in that direction. That would be great. But I will say this: if we hit a milestone like that, 5.5 has a certain psychological milestone to it. I think that's when people are going to start to say, all right, it's a little higher than it used to be, but it's reasonable at this point. 6.25 is a little high because we're used to much lower rates. So, if you take all the people, and keep in mind limited inventory, if you take all the people that are still holding out because it's 6.25, still a little high for them, but they think when they hit 5.5, they're going to spring into action. If you're looking right now to make a move and you wait until it goes to 5.5, you're joining the throngs of people that are also waiting for the 5.5. So we're talking about 0.75% difference. Now, over the course of 30 years on a $600,000 purchase, it's not an insignificant amount of money. I'm not saying it is. What I am saying is, in order to acquire that $600,000 house, if you wait until you're involved in the super active spring market with all the people looking at 5.5% rates that jumped into action, obviously it's going to be more competitive. So you're going to have to be bidding up a little bit more on homes. And, if you pay another 30 or 40 grand up front because it's more competitive, was it really worth it waiting from the time it went from 6.25 to 5.5? Who knows? I think it's probably a toss-up, and it's almost impossible to tell for sure, because you can't really A/B that situation. You don't know how many bids you're going to get at 6.25 versus 5.5, but I can pretty much assure you that at 5.5 you're going to get more buyers and you're going to get more bids, and the house is going to get bid up higher. So I keep telling people, if you're waiting on those little kind of micro adjustments to the rate, less than a percent is like going to get you into a comfort zone, then dive in now because it's less competitive. Over the winter, when rates got a lot higher, I had a specific buyer that got himself a killer deal because he wasn't afraid of the fact that the rate was a little bit higher, because first of all, he's putting a big down payment down, but also he's just planning on refinancing. And, conventional wisdom would say that most likely the rates are going to go down at some point and he'll just refinance at that point. In fact, he took advantage of a very good program with Movement Mortgage where he has, I believe it's 2 years, don't quote me on that, to have a reduced cost on his refinance for 2 years. So he's really going to take advantage of that. So that was a strategic decision. I'll give you a very similar conversation that I had recently with someone. and this gets into like personal beliefs as far as like finances and making investments in homes and keeping in mind timelines. So a friend of mine was looking at putting a deck, a pretty significant deck on their house, and they don't have a super expensive house, but reasonably priced house, and let's call the deck 40 grand. And the options were to, potentially wait to use cash, save up money. Let's say that takes 5 years to save up 40 grand in cash and build this deck. Option number two would be to do a second mortgage on the house. I don't even know that people still do that. He mentioned that. I don't know anything about second mortgages. I really don't know if that's even still a thing. And then I recommended that he check out a HELOC situation, either a home equity line of credit or just a home equity loan. Two different avenues to go there. I generally say go with the HELOC line of credit because it's flexible and it just kind of sits there. And if you want to go buy your deck and then pay it down immediately, you still have that line of credit available just in case another project comes up or, something catastrophic happens to the house, or you're like me and you're on, inconsistent income. Obviously if you work on commission, there's, anything can happen. And, at least you have this kind of safety net in place. And I said, you can either, and he said, it's going to cost me about, I think he said $15,000 in interest to take out a home equity loan and build the deck now. And by the time I pay it off over the course of, I think he said 20 years, it's going to cost me about 15 grand. And a couple things I said there is, number one is he was looking at the loan. I still think that the line of credit just gives you flexibility. I think they're running about 8% now interest wise. I said, first of all, you're making one assumption. That assumption is that you are only going to make the minimum payments. If you can speed up that payment process, it's not 15 grand anymore. Maybe it's 5 grand. If you can speed up the payment process, pay over what the minimum payment would be. Second of all, he's my age. So, you're 43 years old. You wait 5 years to put this deck on your house. Now you're 48 years old. Wouldn't you rather just be enjoying your deck? If the deck's a constant, which by the way, it's not, because who knows what building supplies are going to be for a $40,000 deck. I'm sure it's not a small variable. So who knows what building supplies will be in 5 years, but we know what they are now, and it would cost them 40 grand. So, let's call the 40 grand constant, which it's almost certainly not, but for the sake of this argument, let's call it constant. So it's 40 grand now or 40 grand in 5 years, cash in 5 years or home equity loan now. You spend the 40 grand now, it's going to cost you 15 grand. So basically the question is for $15,000, because the 40 grand is eliminated, that's the constant. For $15,000, would you build this deck right now and get to use it for the next 5 years? Or for $0, would you rather wait 5 years and not have your deck for the next 5 summers? And to me, and this is just a personal decision, for me, I'll pay the 15 grand. I'll pay the 15 grand. So for the next 5 summers, I'm sitting out on my deck, grilling and having dinner, having people over, enjoying this time, in what I would consider the prime of my life with kids and entertaining and everything else. I'll do the 15 grand. So it's a little bit of a personal thing there, because I know a lot of my clients come to me with very clean cut, like dollars and cents way of looking at things. And in this market, that's pretty tough because, like I just said, this ties back to my conversation. Instead of talking about the deck over 5 years, let's talk about a house over 6 months. You can go get that house right now, and your interest rate's a little bit higher. And again, if assuming you're not making your minimum payments on your mortgage and you're never going to refinance, let's say it costs you an extra 30 grand in interest. Would you rather pay that 30 grand and get the house that you want when you want it? Or would you rather wait out the market for 3 years or 6 months or whatever it may be and, get something else, and we don't know what's going to happen. The rates could go up. That is not out of the realm of possibility. And I think you have to take it on a case-by-case basis. What I always tell people, and I've been saying this on this thing probably ad nauseum, if you listen to this or watch this with any level of regularity, you've definitely heard me say this, but just be ready, because the clients I was just talking to, the whole reason they started this process because the house did come up. They hadn't gotten started because they keep getting my emails with listings and they keep falling flat. They see the new houses that hit the market and they're like, there's just like nothing available. And then next day you wake up and you get the email and you're like, that's the perfect house. However, now we're not ready because we just assumed there was no inventory. But it only takes one house. You can only buy, I mean, I guess some people can buy more than one house, but most of us are only buying one house. And it only takes an email at 8 o'clock in the morning on a weekday for that perfect house to pop up. And the big mistake that people make is they are just not ready because they wrapped this whole generalization up into one assumption and one conclusion that I can't do this now because there's no inventory. But it only takes one house for there to be inventory. So in this case, these people saw a house come and go, that they're like, you know what, that house really would have worked for us. It was well within their budget, so they had a little money to play with. And it came and went. Obviously, it sold very quickly. And they said, we can't let that happen again because that house would have solved all our, wants and desires to make a move. So that's why they're selling their condo now. And they're going to figure out the short-term pain of renting or, living with family or whatever it may be in order to make the rest of their, the next 20 to 25 years that they'll be in their next house. To make that right, they're going to get themselves in a position to be ready to pounce. So, while rates are still dropping, don't wait for them to bottom out because then everyone's going to hit the market. I mean, if we're lucky, rates will get down below 5%. But with the lack of inventory already being an issue and this being completely a seller's market, what do you think is going to happen when the rates drop another, 1.5 to 2 points? It's not going to get easier for buyers. It's going to get harder. So, I think the biggest mistake that people can make right now is not going through that pain right now to, just be ready. I'm not saying that it's going to result in you getting a house. What I am saying though, is if you are ready, there's a very good chance that we can navigate it. Deals are still happening all the time. It's not like real estate stalled. This is the busiest I've been in, probably about a year. There's definitely real estate being transacted. So a lot of people are not waiting on the sidelines. I just know from my own client base that a lot of people are waiting on the sidelines. They're waiting for something to happen that may never happen, or could take, 6 months to 2 years to happen. So I just think it's something worth considering that when you're trying to transact real estate, it's obviously a big transaction. You're taking, you're definitely taking risk. And, in order to make big things happen, there's always going to be risk. Every real estate transaction has a level of risk. So you have to take that into consideration. You can't think small when it comes to this market, because if you're just thinking like, I want to save a few bucks, and a few bucks obviously is a relative term, but I want to save tens of thousands of dollars by waiting until the rates dropped before I buy a house. It's just not that simple, because again, when the rates get better, it's going to be more competitive. You're going to bid that price up. But also you're completely dismissing the fact, are you going to overpay your mortgage? Because if you are, that interest rate the interest hit is going to be reduced. But also, if you buy now or you buy in 6 months, if there's an opportunity to refinance in 3 years, it wouldn't have mattered if you had bought, 6 months prior, 6 months forward. It doesn't matter, because you're still going to refinance in 3 years when the rates drop. I'm not saying that's going to happen. I'm just, in theory. So I do think that people continue to speculate on real estate quite a bit. And I do think that, paralysis by overanalysis situation that, people, first of all, listen to a lot of the news reports about, crazy terms and everything. I will say this, actually, right before I got on this podcast, I checked the local market. So I try to check my hot sheets every day. But of the last 9, let's see, make sure I have that number right. 1, 2, 3, 4, 5, 6, 7, 8, 9. The last 9 homes that sold in Hunterdon County, and actually it's not all of Hunterdon County, it's a few towns that I monitor. Only 2 of them were over asking price. So 7 of the most recent homes, and this is for Clinton Township, Franklin Township, and Union Township. three, three of the nine sold for over asking. 6 of the 9 were under asking. And it's going to be interesting to watch that. So I'm looking at them now. The one I know because I had an offer in on it went for about 27,000 over asking. That was a very unique situation. That was a house that needed a complete gut job. I almost want to say that's a little bit of an outlier, and we'll take that out of the equation. Next one was a condo in Beaverbrook, 14,000 under asking. One more condo in Beaverbrook, $7,000 over asking. Clinton Township, standard colonial 3-bedroom house, 14,000 under asking. Colonial in Clinton Township, that was 15 over asking. Colonial in Pittstown, that's a ranch, I'm sorry, 29 under asking. A ranch also in Pittstown, 10 under asking. Townhouse in Union Township, 5 under asking. And a colonial in Union Township, 15 under asking. That's the most I've seen in a long time. As recently as a year ago, we were seeing things going for $100,000 over asking on some of these price points I'm looking at. I'm looking at price points ranging from 700,000 to $1 million. We were typically seeing 100,000 over asking, like not even being surprised by it anymore. Now they're starting to come in under asking. Big reason, obviously, is the rates are higher. People just don't have the buying power, but a lot of those were cash purchases. So, is this a little balance coming to the market? I'm not sure. But listen, if you're thinking about selling, I wouldn't wait too much longer because there definitely appears to be some things happening. But this shows the uncertainty of these markets because it is definitely still a seller's market. Inventory is dreadful. Rates are, I think public perception is that rates are high. I would argue that historically they're below average, even though they're high for the recent history. I will acknowledge that. Certainly higher than I paid for, either of my first 2 houses. But so we have all these variables coming together. No inventory, rates trending downward. We know that they could spike tomorrow, but they are generally trending downward. Price versus listing price is definitely shifting downward. So what happens next is anyone's guess. This is why it's just not so simple to speculate on what's going to happen next to make your move. Because at the end of the day, the things that we're talking about are relatively small adjustments, right? So like, even if you wait 6 months, you might throw yourself into an even less ideal market. And for what? It's not going to be a huge amount of money. So to me, it comes down to lifestyle. If you're talking about your primary residence for the next 25 years, then I think, listen, you do what you got to do and you get yourself in a situation that makes you happy and you don't worry about the difference between, 10 and 30 grand. And we're not talking 10, 30 grand cash. We're talking 10, 30 grand over the next 30 years. So, it's interesting because I do still see a lot of that pause from consumers in this market. And listen, we're all, I'm a professional. I'm exposed to this stuff every day. It's still, I'm not going to venture a guess as to what the next market is. I said to the clients today, I said, this market over the past 4 years has been a pendulum because when I entered the business 4 years ago, it was largely a buyer's market. Now it's a seller's market, but it's been a solid seller's market for 3 years. And I personally don't think that's going to change, although there are some indications here that it is starting to swing back. So, at the end of the day, what is the lesson? Don't try and speculate as to what's going to happen next. Just make your move. So, if you find yourself in a situation where you do need to go through a couple different gyrations to make the next move, that's when you engage someone like me, or wherever you are, I can get you in touch with someone that is like me, and lay out your options for how you would make your next move. I just had this conversation with my clients today. I think they're playing it perfectly. I had a conversation with clients yesterday. I laid out the 3 options for them, and they said, you know what, we're going to stay put for now. And that's their decision for sure, because they were definitely looking at it from a dollars and cents standpoint. And I understood that's a unique situation. I'm not trying to, shame them for not doing business with me or anything. I'll keep in touch with them. Very nice people. But for their situation, we laid out all the options and they said, you know what, for now, we're going to stay put. And that's okay. Like, I'm not the type of realtor that's going to like push you and say, no, you should do this right now. Everyone's situation is unique. I laid out the scenarios for them. When they told me that they were going to stay put, I wasn't surprised. And, I think if they were looking at it from a standpoint of they were going to make a bunch of money and then be able to just dive into the next house and everything was flush, I don't think they were in that situation. So I was not at all surprised. And I didn't give them any pushback. I said, that's great. I'll keep in touch. And, you let me know if you need anything. Sometimes that's the outcome. It's a case-by-case basis. So, everything I'm saying is like, I'm not saying just take my word for it. I'm also saying don't take the media version of it of like, it's crazy out there, 100,000 over asking, people still not getting houses. That's definitely not the full story. What I would recommend is engaging a professional, myself or someone in my industry, and saying, Craig, here's our whole scenario. Here's what we currently have. Here's what we need to do. Now you tell us what you would recommend as far as a strategy of getting us from point A to point B. And then I will lay those options out for you. That is definitely the way to go, because we have a lot more insight as to what is to be expected. We can't guarantee any results, but we can at least tell you what's to be expected. So, but that's pretty much it. I just want to kind of just put that on people that, make sure that you're not just making assumptions about this market, and make sure that you are considering that you can still make a strategic move in light of this current market. So I hope that's helpful. If you have any questions whatsoever, please feel free to give me a call. Numbers here. You can message me on any of the platforms this airs on. And that's pretty much it for this week, because I do have to run. But I hope you're all doing well, staying healthy, and I will see you next week. All right. Take care.